NBIS down 0.27%. This is Wednesday, the 22nd of October, 2025, pre-market session. The stock is ahead, is probably going to print. It's a seventh straight session of losses. There seemed to be a rotation away from high momentum infrastructure stocks like NBIS, Iran, and indeed more into software and consumer tech stocks like Adobe and I think Apple is benefiting. We've noticed that Adobe, for instance, it has I think over the last three trading sessions, it has printed gains since the 17th, since Friday the 17th up to yesterday. It's been printing high prices. That is for Adobe. That is what may be going on. The extrapolation on this daily chart for MBIS is saying that yeah, it may continue to print lower prices up till the end of this month, up to the 31st of October. Then after that, there might be there might be a bounce that may not be sustained, and after that, maybe the contraction may continue. This is a contraction of the. I mean, it depends on how you want to look at it. Where do you want to start counting? Is it from April or from or September? Which one do you want to start counting from? So these infrastructure stocks they've been rallying and non-stop, yeah, non-stop if you like for months. So as things stand right now, what we can see is that this momentum, this squeeze momentum indicator we have here is saying that it's not a very good time to get into NBIS. Even if it's declining, not according to what it's just saying, but we're really not going to read a lot of meaning into that. So we are just going to reapply the price pressure momentum indicator for the 21-day moving averages to see what is being indicated. Okay, so the 10 and 21-day moving averages, they are severely bearish now. They are bearish now. Yeah. Positions opened all the way back to 21 days ago are clearly out of profit. Okay, so let's see whether people are buying or not. Let's see whether the momentum is increasing. The selling pressure is good. The selling pressure is decreasing, but yeah, it's decreasing, but the buying pressure is not. The selling pressure is decreasing. Momentum is decreasing. Buying pressure is decreasing as well. Buying pressure is decreasing as well. The pace is equally decreasing. So everything is on the decline as things stand right now on this based on this daily chart. Yeah, the 4-hour chart might magnify much of what we have right now. I think it's saying that a bounce might occur. It's still down, still down 0.14. It's just recovering, and it's saying that we may have a bounce going all the way towards the close of Friday's trading session. Yeah, even though the extrapolation on the daily chart is saying that lower prices will continue to print, this could still fit in there because this prints every 4 hours, whereas the daily chart prints at the close of every trading session. On this 4-hour chart, we have an upper projection of 108.68. Previous projections were as high as 116.31, 119.15, 148.71, 161.30, 169.08. Okay, setting pressure. Let's see what we have down here. Yeah, severely bearish. And are they improving? Is it improving? Setting pressure. Momentum is declining, yes. But okay, but improving, obviously, you can see it has just clearly bounced here. Is it improving? Yes, it is improving. Yeah, everything is improving. Pace is improving. Yeah, but really, it's just this is for traders. This is what they're doing. They're taking advantage of the dip. Why not? Why not? So, but it does not mean that the stock is going to bounce or that there's no rotation going on right now. But let's find out more. Let's really find out more what's really going on.
Nebius, NBIS, is at the center of intense market chatter as traders and investors debate whether the recent pullback in share price represents a buying opportunity or an early warning sign of a deeper correction. The discussion comes amid a stretch of red trading days, heightened volatility, and a broader debate over whether the AI sector may be entering a rotation phase after months of relentless momentum. Dip buying opportunity or warning sign? Many in the community view the dip as a healthy reset following the stock's explosive rally earlier in the year. Bullish investors argue that the underlying growth story remains intact, supported by Nebius's multi-billion-dollar deal with Microsoft, its expanding data center footprint, and rising demand for AI infrastructure. These investors believe that the recent weakness could provide an attractive entry point, especially if key technical support levels hold. Several traders are eyeing these levels closely, suggesting that a bounce could reignite momentum heading into upcoming earnings. AI sector rotation concerns. On the other hand, a growing number of market participants are cautious, pointing to signs of rotation within the AI sector. Some capital appears to be shifting from high momentum infrastructure names like Nebius toward other corners of the market, including software and consumer tech plays. This sentiment reflects broader market conditions, where rising yields, macro uncertainty, and sector specific consolidation can lead to temporary pullbacks, even in fundamentally strong names. Earnings as a key catalyst. With earnings approaching, many traders are positioning carefully, anticipating a potential catalyst that could break the stock out of its current range. A strong earnings report could reinforce the bull case, confirming sustained revenue growth and backlog strength. Conversely, any disappointment or cautious guidance could accelerate the downside, making this a critical inflection point. Valuation and growth debate. The valuation debate remains front and center. Bulls argue that Nebius still trades at a discount compared to peers like CoreWeave, given its contracts, backlog, and growth outlook. Bears counter that the stock has run too far too fast, leaving it vulnerable to a sharper correction if growth expectations falter. Bigger picture. Nebius now finds itself at a crossroads. A technical bounce supported by strong earnings could renew confidence in its growth story. A continued sell off could signal broader sentiment shifts in the AI infrastructure trade. Either way, the next few sessions, and especially the upcoming earnings report, are likely to set the tone for the stock's next major move.
Okay, thank you very much for watching this video.